Hello, Assalamualaikum. My name is Muhammad and I'm from BS Economics 7. And today I'm probably here to talk about this and about my company and whether you should invest in it or not. Okay, so first of all, we will start from here. Sorry, my bad. Okay, okay. So the name of my company is Sui Northern Gas Limited, and I'm here to tell you guys whether you should invest in it or not. So it's kind of a presentation like that. Okay. So first of all, this is my company's balance sheet. As you guys can see here, it has on one side balance sheet here, and on the other side it has a statement of profit and loss. I believe. It's downside. Sorry. This is statement of profit and loss. This is our income statement. Okay. So let's start from here um, from our first ratio, which we call profitability ratios, operating profit margin. So operating profit margin stands for how much a company is getting in sales revenue from its operating profit. How much company gets operating profit from its sales revenue. So as you guys can see here, it is actually decreasing from here. This is not a good sign since this value is decreasing here. On the other hand, if you look at the gross profit margin, since it is increasing from 2020 to, it is also decreasing from 2020 to 2022. So that is another bad sign here. On the other hand, then we have return on ordinary shareholders fund. As you guys can see here, it is actually decreasing, increasing here in all these 3 years, which shows that there is a good symbol from here. And the return on capital employed, as you guys can know that the capital employed, the return on capital employed means how much a company gets on its return from the capital it employs. Like it includes its non-current liabilities, its total equity, and things like all of that. Okay, so as you guys can see here, it's actually decreasing here. It's actually increasing here, so that is a good sign for the company. Next, we walk up to the efficiency ratios. So in efficiency, first we have average inventories turnover ratio. So average inventories turnover ratio means how much days a company takes to turn its inventories to sale. So as you guys can see here, it has actually decreased from 2020 from 4 to 2022 3. So that means that the company now takes less time to convert its inventories to sale. So that is actually a good sign here. And on the other side, then we have average settlement period of receivables. So the average settlement of period of so the receivable means how much. So this actually means that how much a company takes, how much days companies take to collect its payments. Okay, to collect its receivables. So as you guys can see here, in 2020 we have 158, and then it actually increases, and then it actually decreases then. So that means the company is now taking less days, 178 days to collect all its receivables in a short term. Okay. Next, we have then average settlement period of payables. So the average settlement of period payables is has shows the same story as above. So as you guys can see here, that actually increases and then decreases here the same way. Okay, so that means the company can now take some 205 days to actually pay off all its non-current liabilities and things like that. Sorry, current liabilities and things like that. On the other hand, then we have sales revenue to capital employed. So this ratio here is actually very important in determining how much we are getting on our capital employed. Okay, so as you guys can see here, it's actually showing the same. It's actually slightly decreases and then increases significantly from 2021 to 2022. There is a significant increase. Okay, so that is a good sign as well. And then we have sales revenue per employee. That means that how much a company gets per employee in real revenue. So guys can see here, this actually is increasing is increasing from 2020 to 2022. So that is actually a good sign. So that means the company is earning more for per employee. And then we have liquidity ratios. Okay, so the point of these liquidity ratios is to tell us how much a company can understand. So the point of the liquidity ratios is actually to like the point of the liquidity ratios tell us how much company takes how much money company has to pay off its current liabilities, like how much assets it has that can be converted into cash immediately. So that's the point of liquidity ratios. In the first liquidity ratio, we have current ratio. So the current ratio means this stands for current assets divided by current liabilities. So this value of 0.98 means that company has 0.98 rupees to pay off its 1 rupees of liabilities, I believe. Okay, so as you guys can see here, is actually increasing significantly from 0.95 to 0.98. That means the company is doing very well in this aspect. And then we have acid test ratio. In acid test ratio, we just exclude inventories from the current liabilities, current assets, so that we can actually get more, what can I say, realistic point of view of how much days it takes, how much money we have. It's the same story here, as you guys can see, that it is increasing from 0.93 in 2020 to 0.96 in 2021, and then 0.97 to 2022. And then we have gearing ratio. Okay, that's good enough. Okay, so the gearing ratio here stands for how much company has in debt per to its equity. Okay, it's like how much company takes in debt to its equity. So as you guys can see here, it's actually decreasing here. So that means the company it has lowered its leverage over the years. So it has went from 7.59 in 2020 to 5.04 in 2021, 2022. And then we have interest cover ratio. Interest cover ratio tells us how much company pays in its interest coverage. So like most of more like just like most of the companies, my company Sui Northern Gas Limited also takes loans to leverage to leverage, so that it has to pay interest over these loans later. So the interest coverage ratio is calculated from the operating profit, I believe. So as you guys can see here, it is decreasing. It has it increases from in 2020 to 2021, and then it actually decreases from 2021 to 2022. So that's a good sign as well here. That means the company is not taking as much debt as that, its interest coverage it's still manageable, I believe. Okay. So next we have investment ratios. In the investment ratios, first we have dividend payout ratio. So the dividend payout ratio tells us how much in dividend company gives in all of this. So first of all, we have 20. So as you guys can see here, it is decreasing it is decreasing throughout the years. So it was 42.3 in 2022, and then it went to 24.5 in 2021. And then dividend cover ratio, we have 4.09, and it shows us the same thing. It went from 2.36 in 2022 to 4.09 in 2022. Sorry, 2020 in 2020 it was 2.36, and then it went to 4.09 in 2022. And then we have dividend yield ratio. As you guys can see here, dividend yield. So how much, like in dividend yield ratio, we take into account the tax rate. So okay, so this is much more realistic in a sense that we actually account for the tax that the government has on the dividends. So in dividend yield ratio, as you guys can see here, it is 8.30, and it has increased from 2022 to 2021, went from 5.20 to 10.23, and then from 10.23 it went to 8.30. So that's a good sign as well. And then we have earnings per share. So the earnings per share is one of the most important one, because it just like completely it tells us how much earnings we are having per share. Okay, so as you guys can see here, it is 774. It has increased from 2020 to 2021. So that's a good sign as well. And then we have price slash earning ratios. Okay, so the price slash earning, as the name implies, shows us how much a price is the part of the earnings. Like how much is the price of the share per to the earnings of it. Okay, so that gives us the more certain view of how much we are getting on our investments. Okay, so as you guys can see here, price slash earning ratios is 4.95, 4.95, and then it went from 6.63 to 13.66. So that shows us that it is decreasing. It is decreasing, so that's a good sign, I believe. That means that its earnings are increasing, so that means that our company is now earning much more, or either its price has declined. So that's a good sign here. And then we have price slash earning growth ratio, and then which is also showing us that it is decreasing significantly. It has went from 16.11 in 2020 to 5.25 in 2022. So that's a good sign as well. Okay. So here we have our rating, I believe. So in my opinion, considering all of this, I believe that this company is a very good investment, considering that its price slash earning ratios has its earnings per share have increased significantly, and also considering that it has a price slash earning growth ratio of 5.25, I believe. Not only this, I believe that it has actually a very good liquidity ratio, which is 0.98. It is little. I'm not saying that it's very good, but still it is near the value of one that I believe which is capable of that. The only defect I see is definitely in the sales revenue, is in as it is every settlement period of receivables and payables. That is showing that there are some inconsistencies in the company. Okay. And before all of that, I believe this. My opinion is that you should guys should invest in the company, considering all of this. Oh, so some little bit of introduction about my company here. That the CEO of my company is Amrit Tofil. Its headquarters is located in Karachi, but its production plant is located in Sui, Balochistan. So they mainly deal in the products of natural gas and things like this. They buy natural gas, they refine it, and then they sell it to the households and the industries and things like that. So that is their main business model here. Okay. Um. Okay. I believe that I had satisfied all of you, and I hope to see you again. Thanks.